Good afternoon. Thanks for tuning in. You're watching Ask BQ on Bloomberg Quint Live. I'm Navneet Saluja D'Souza.
Hi Navneet, I'm Alex Matthew. If you've got questions on equity, then this is the perfect show for you. You can send those queries to us on Twitter, Facebook, YouTube and WhatsApp. You can also call us on 022-454-04141 or you can mail us on askbq@bloombergquint.com. Just make sure to add the AskBQ hashtag. Navneet, it's chaos the world over in terms of markets. The latest flash at the bottom of the screen indicating that possibly, just maybe, there could be talks once again between China and the US, a de-escalation of the escalation that took place
on Friday. Okay, so U-turn just in 2 days, but let's see if there are any more developments which come by or not. But for the time being, remember, because of escalation and trade war, the commentary which came on Friday, that actually spooked the markets in US, and of course, the Asian markets this morning opened with deep cuts. India is bucking the trend, though we had a gap-up opening. The rally fizzled out for some time, but once again from lower levels we are seeing gains, and right now Nifty is back to inching very closer to the mark of 11,000 where we opened today. So the Sensex also sitting with gains of about 500 points in trade, and all this is happening after Finance Minister Nirmala Sitharaman on Friday announced some relief measures also for the capital market. So 27,500 for Nifty Bank, which is sitting with gains of about 2%. I want to pull up India Wix because that went up quite sharply in trade in the morning session. It was somewhere about 18 to 18.5. It was up 9 to 10%. So Wix has also cooled off very sharply. That could be a very comforting sign for the bulls. India Wix at 17 points. We were just looking at the broader markets. I think gains today are seen in both benchmarks as well as the broader market indices. So mid-cap index up about 1% in trade, and the Nifty small-cap index has seen gains of about 1.5%. Let's pull up the Nifty contributors. That's going to tell you which are the stocks which are leading the Nifty higher. So it's all dominated by the heavyweights, and HDFC Group, which together, the twins rather, which together hold nearly 20% weightage, is contributing about closer to 70 points move that we are seeing on Nifty. ICICI Bank and ITC are couple of the other heavyweights, but negative ticks seen for stocks like Sun Pharma. And remember, metals as a pack has been reeling under pressure, and that's owing to the global cues that we are getting. Rupee strengthening, LME prices are rupee is weakening and LME prices are correcting. So you've seen the Nifty metals index, which is down. That's also recovered. It was down 4% at one point of time. And alongside, you've also got auto, which has seen a muted session in today's trade. But in terms of gainers, you've got the Nifty PSU Banking Index and the Media Pack, which are seeing some bit of gains today. So very quickly, I'm going to take you through a couple of stocks from the broader markets which are seeing good gains. One of them is Ashok Leyland, which has bounced back today. The stock's up and about, and we have seen some fresh buying coming in this in today's session for this stock. Dewan Housing and Eminent Financial from the NBFC space are up and about. On the losing side, JSPL is down. Motherson Sumi continues to see downtrend, down 2% in trade, and Future Consumer has fallen a good amount of volumes. That stock's down about 4%. So net, volatile session, but we're back in the green.
All right. Well, we've got two experts, as usual, to answer all of your questions. Right now, joined by one of them, Gaurang Shah of Geojit Financial Services will join us in just a short while. Meanwhile, we've got Brijesh Singh of Stock Access, who's here to answer all of your technical queries. Before we get started with the queries, let me take you through Brijesh's picks for you. He says that you can consider buying Apollo Hospital at a rate that is below 1,435. The stock, we'll have to see where it's currently trading. It's just around 1,441. He says the target for this trade is 1,490 and a stop loss is 1,400. This is a trade that you can consider picking for the next 4 to 6 days. The second call is ICICI Bank. You can buy it below 398 with a target of 415 and a stop loss on this trade of 388. The time period again is the same, 4 to 6 days. And the last one with a similar time period is a buy call on Divi's Lab below 1,590 with a target of 1,680 and a stop loss on this trade of 1,550.
Okay, so those are some technical calls coming your way. Before we start taking queries, I also want to take views from Gaurang Shah, who joins us on the show today. Hi, Gaurang. Good afternoon to you. Oh, okay, we've not got him yet. All right, so we'll start taking some technical queries in the meanwhile. On YouTube, the first query today has come in from Ayush Jain. He's asking why the ITC shares have fallen despite of other FMCG companies doing well. So, Ayush, I'm going to get you a technical view right now from Brijesh with regard to ITC, though it's bounced bounced back in today's session. The stock's seen gains of about nearly 3%. Brijesh, how would you read the move today on the charts, and would you recommend taking any position on ITC?
Good morning, everyone. See, if I talk about ITC now, the ITC stocks somewhere around 310 when the stock had made a high in a month of April, it's been getting corrected. Now, this level of say 240 zone or say 225 zone is a strong support, and I am looking from this level a minor pullback, and that minor pullback when I'm saying that it's looking like previous swing lows of 265 followed by 275. So if someone has a view of a very short-term time frame, then at the present rate of 242, keep a stop loss of 225 and pay for the target of 265 to 275. But if someone has a view of say a 1 year plus perspective, then I would be saying present rate or any dip till 225 one can accumulate with a strict stop loss of 210 and play for the target of 310 followed by 340. So so it depends upon the trader's mentality whether he's looking for a short term or a long term. In both the scenario right now, the risk reward ratio is the favor of bulls.
All right, that's the view on ITC. We've also answered Chirag's question from Facebook. But Gaurang Shah is joining us now. Gaurang, good afternoon. I just want to take your view based on what you read from the finance minister's comments and everything that's gone down in the session so far today. Would you recommend, based on everything that she said, that this is a good level to start buying over the next couple of months?
Well, thanks, Alex, and good afternoon to all of you all. So, I think what went down well for me was the quick reaction that the government took for all the representations that were made by various stakeholders, sector-wise, industry-wise. And this was not the last. She also went on to say that there will be a couple of more announcements that will be coming through to revive the, killer instincts of the market and fire up the growth on all cylinders. So I think it all went down well, and we did see the market react in the morning when we opened, but we also saw it give up all the losses. And then again, we are seeing some bit of recovery thanks to the statement made by the US President Donald Trump, and I hope on a lighter note it was not a wrong call. But overall, my sense is that don't be too adventurous and venture into the larger market. Stick your focus to frontline, large cap, and then possibly moving on to mid-large caps, if you will, as we call it. But avoid the small cap and the lesser known mid caps, because that is where my sense, Alex, is that a lot of pain is there. And especially on one sector, we spoke about it on our earlier interactions also, Alex. Auto sector is something that we remain positive, and I think this correction should be viewed as buying opportunity post the announcement made by the finance minister. The only thing is maybe the recovery on earnings may be about 2 years, 2.5 years, but I think they could definitely create wealth.
Okay. Hi, Gaurang. Good afternoon. Since we are on the topic of markets and what's been happening, it's been a volatile session. A lot of our viewers, like Anand, they want to know what are the top ideas now that one can look at. We have seen a sharp recovery coming by. Is there anything in the mid cap or in the larger, universe you would recommend buying something at current levels?
So there are a whole host of ideas, and after to you as well, Navneet. But I'll restrict my picks to maybe 4 or 5, giving the primary to private sector banks. So you can look at HDFC, Axis, ICICI, either of them. Insurance policy, we've spoken earlier, Navneet, we remain extremely positive. And HDFC Life is the top pick that I can suggest over there. Slipping on to NBFCs, Bajaj Finance, and possibly Cholamandalam Investment. These would be the 2 ideas. And if I have to extend my picks to one more sector, then from the IT, my sense is Tech Mahindra and TCS could be a very decent basket of stocks. And that's one of the reasons why I said, Navneet, that keep your focus on the large cap with very few select sectors and stocks in mind.
Okay, Saurabh and Bharat have got the same question that they did around this time last week. So I'm going to ask this today because it's a short-term view on SBI Life and HDFC Life. Both of them have gotten in very early and have managed to secure significant gains on their trade. The question, Brijesh, is whether or not they should book profits at this time or hold on for the very short term.
See, Eric, assuming that if they have bought at that at a down level, so right now this as if I talk about SBI Life, it's been quoting somewhere around 826 around. So till the stock has been trading above 785 or 790, I would be saying hold on. And on the higher side, it has a minor resistance at 850 to 860 zones. Once this level of 850 to 860 zones has been crossed, then we can see stock jumping towards a level of 920. Regarding with HDFC Life Insurance has been there, then I would be saying hold on, not for a shorter term, for a longer term also, because the stock is in the process of making a cup and handle pattern. Now the cup and handle pattern means it's a bullish sign. So on the weekly chart, already the cup has been formed and the handle has been in the process. So when I'm saying handle in the process, that means the stock can come to the level of somewhere around 480. So if keeping that thing at the stop loss, I would be saying to hold on for your position for the shorter term as well as for the long term. Now on the higher side, stock has a resistance at somewhere around 540 to 560 band, but once this has been surpassed, stock can jump to the level of 720 plus. So for the long term, 720 is a target which I would be watching for. For a very short term time frame, then somewhere around 540 to 560 band would be the resistance.
Okay, so those are that's the technical view on HDFC Life as well as SBI Life. I'm going to take Mayank Saraf's query. He's asking if this is the right time to start buying stocks like Tata Motors, Yes Bank, Tata Steel and others as they've fallen too much, and his time horizon is next 5 to 7 years. Gaurang, it's an interesting question. All of them have been laggards, Tata Motors, Tata Steel, and of course, Yes Bank, which continues to be under pressure even after the fundraising that they've done. Of course, the brokerages are now of the view that they require more capital and they could go for second round of funding. But the sort of exposure they've had to a lot of troubled groups is clearly not dying. So legacy issues still there for Yes Bank. But would you suggest someone to buy into these sort of stocks if you have a time horizon of next 5 to 7 years? Or in any sort of correction, look at good quality stocks?
So Navneet, first of all, the rationale itself is not right. Just because the stocks have fallen, you should buy. I think that's a very, how do I say it? And I hope I am pardoned for that. That's a very stupid excuse. And who knows, there are a lot of investors who bought these stocks when they corrected 30, 40, 50%. And from those levels, they have corrected another, 20, 30, 40, 50%. And who's to say that they cannot correct further? I am restricting my comments to Yes Bank and Yes Bank, honestly, Navneet, we had a coverage. Buy coverage, then we converted it to sell twice. Our lower targets earlier were about, I think if I'm not mistaken, 130 was the first lower target, and then it was 80 or 85. And the stock is trading sub 60 or below 60. Avoid Yes Bank, but Tata Motor and Tata Steel, again, like I mentioned, I was referring to auto sector a while back when I was in conversation with Alex. Have 2.5 years. Don't put all your money at one time in Tata Motors. Start with 25, 30, 40% given the time correction that we have seen. And possibly the 2.5, 3 year plus time horizon, you should see Tata Motor recovering. Tata Steel, this is a different sector altogether. We are talking about metals, and that's largely dependent on what happens in US and China. But my sense, Navneet, is that forget about exports, domestic market looks quite healthy. And if government has to spend 100 lakh crores on infrastructure development, two commodities will definitely get consumed, metal and cement, which are very core to infrastructure creation. And of course, Tata Steel happens to be one of the largest producer in terms of capacity. And whatever drawbacks were there. But if you don't want to, go through all this painful global tension, local auto sector recovery, then instead of looking at Tata Motor, Yes Bank and Tata Steel, my sense is in the consumption space, you should look at Dabur, Marico and Godrej Consumer Products Limited. This is one aspect. From autos, if you want, my advice would be to look at M&M or Escorts, or my first priority would be Maruti. And for the third sector, since he's got pick of 3, my third sector would be a private sector bank. Instead of Yes Bank, look at ICICI Bank.
Okay, Escorts was one of the pick Gaurang mentioned right now. The stock has seen significant correction. It's up and about in trade today, about 5%. But if you pull up the year-to-date chart, or in fact, if you go a little further back and you look at a year so far, it's over 30% of a correction. In fact, I think somewhere down the line, we had Abhishek who picked up at levels of 542, but he has a short-term view. He's asking now, the stock is just around 475 thereabouts, Brijesh, whether he should book his losses. Gaurang thinks it's a good buy at this current level. What would you say on the charts?
See, technically, no doubt the stock has been trading with lower tops and lower bottom formation. Now the stock has, after making a low 420, it has given a bounce back. And right now the stock has been quoting at 475. Now the previous swing high was somewhere around 495. So I would be suggesting right now to hold on if he's looking for a short-term play. Then the 440, 445 band would be the support. So keeping that thing as a stop loss, I would be suggesting to hold on. 495 would be the resistance. So as soon as the 495 goes, the stock has a chance of going back to the level of 510 to 520. So I would not be suggesting to sell right now. So chances are that the buying price would be coming. Increase your time frame for a short term when I'm assuming that for a couple of months. So if he increases time frame from a 1 month to a 2 month time frame, the chances are that the stock can even touch your buying price, or even if it surpasses the level of 520, then it can even jump to the level of 560 zone. So chances are that your buying price would be coming if you increase the time frame.
Okay, that's the technical view on Escorts, which is up about 5% in trade. Rishabh Tiwari has a query on SBI. Let's just pull up that stock. He's holding 1,000 shares at 360. And plus, he has a long-term view. What he wants to know is whether he should look to average at these levels. Rishabh, I'll take your query to Gaurang, who's not a big fan of averaging. But nevertheless, Gaurang, you've already given your pick, I guess, from the banking space, ICICI Bank. But just talking about the PSU banks and then, the recap news which has come in where the finance minister has announced that immediately they're going to infuse 70,000 crore in the first half only of this fiscal year. Would you play this particular space, that's the PSU banking space, through SBI?
So Navneet, the slight correction, I am not a huge fan of averaging at 1-2% correction, but when you get 5%, 10% correction and then the stock is that you bought is one of the large cap or on the earnings front is a stock which delivers, then my sense is you should always average. And don't average 100%, average 25-30% of the total quantity at a correction of 5% or 10%. I think that because when when you average at 1-2%, it is not called effective averaging. It does not meaningfully bring down your investment price. So I think everyone should bear that in mind. And I definitely would advise averaging in this manner that I have just elaborated. So SBI, well, definitely I think recapitalization is one big positive. Turnaround in terms of public sector banks. Our sense is that the State Bank of India has shown performance and will continue to deliver. So you got in at, I think, what, 350 if I'm not mistaken, if I heard it right, at 270, 275 where the stock is trading. My sense is that you should at least average 25, 30, 40% of the quantity that you have. But stay invested for a longish horizon. I remember at maybe closer to 250, 240, just about a couple of years back, nobody wanted to touch State Bank of India and see the kind of performance that it has given. So stay invested for the long haul. And like I mentioned, you should average in a disciplined manner. I think that's what brings down your cost of investment. So stay invested and average at current levels.
Okay, let's pull up Ultratech Cement. Let's look at the charts. We've got Ujjwal Kumar who wants to know what the support levels are for this counter. It's trading at just about 2.3% higher at 3,952. Brijesh, what are the levels that you're seeing on the charts?
See, Alex, if it is for a short-term trading bet, then I would be suggesting the support lies at somewhere around 3710 to 3720 zone. And if he's looking for a medium-term horizon, then the support lies somewhere around 3500. Whereas on the resistance part, I would be saying when the stock surpasses the level of 4060 marks, then stock can even jump to the level of 4200 plus. So so now it depends upon the trader what time horizon he's been looking for.
Okay, that's Ultratech. By the way, it's up about 2 to 2.5% in today's trade. The next query comes in from Abhinav Jaiswal. He has a query on LIC Housing, which he's bought at 570. He's holding 1,000 shares of it, and he has a long-term horizon for this one. Gaurang, he wants to know what to do. His buying price is about 570, and right now the shares are trading at 428.
Ronit, you will have to help me with the name of the stock again, please.
LIC Housing.
Yeah, so all these what we saw, and especially with the verbatim given by the Honorable Finance Minister that the next set of reforms would be looking at real estate sector and home buyers. And I think there's going to be a major flip that awaits housing finance companies like LIC Housing Finance. So we do have a positive coverage. Interest rates are low. Property prices are lower. Residential prices have started to come down. If you bought in at 570, I think 430, 420, wherever the stock is, it's a great opportunity to average. Hold on to it, extend your time horizon, average at current levels.
That time of the show where we hit the rapid fire segment, just a quick shout out to both our experts. Do keep your answers as short but as cogent as possible to accommodate as many questions as possible. I'm going to start, Gaurang, with you. Thomas Cook bought at slightly elevated levels at 250 in fact. Should they hold on?
Not a great sector where you should look at. There is huge competition. Take a flight to safety. Federal Bank, Ashok Leyland or L&T Finance would be a preferred choice.
Okay, the next query comes in on Marico from Love Lab. He's holding the shares at 370. Brijesh, this one's for you. He wants to know if you should book profits or continue holding Marico.
I would be suggesting to hold on. No doubt today there is a little bit correction, but right now 378 is the stock has been quoting. 385 to 388 is a resistance also where he can book his profit. For the trailing stop loss, I would be suggesting 372 on a closing basis.
Okay, sale bought at levels of 80, Gaurang, seen significant erosion. Do they hold on?
I think it is 50% down. Correct me if I'm wrong, Alex.
More than 50%.
Hold on. Yeah, more than 50%. Yeah, great. So hold on, average at current levels. And like I was elaborating on Tata Steel when the earlier investor asked, metal sector will take time for recovery, but it's not like it is the end of the growth story or a long structural, bear market for metal. You will have to extend your time horizon and average.
Okay, Gaurang, coming back to you, do you like Info Edge? Anirudh is bought at 2070. What he wants to know is, should he look to hold on? He's a long-term investor.
Well, we don't cover the stock, but I have always mentioned this, and at the beginning of the program, price correction or a large correction should not be the only reason. I think it's a very layman's approach. You should have, credible technical or fundamental to back. We don't cover the stock, but I have given few suggestions. He can make an alternative switch.
Okay, Tejas Networks, Gaurang, any coverage on Tejas Networks for the long term?
Well, this is one of the dumb squibs, if you will. Post the IPO, the stock never saw the light of the day. Again, one needs to be careful getting into this kind of stocks.
Okay, very quickly, last query. Brijesh, Aurobindo Pharma bought at 720. What are the charts indicating? Would you advise to add more at current levels?
See, definitely somewhere around 525 is a double bottom formation. So right now the stock is quoting at 602. So till 570 to 600, any level can be used for accumulation purpose. Keep a stop loss of 520 on a closing basis. Higher side resistance light at 670. Anything above 670 on the closing basis, stock can jump to the level of 720.
All right, well, that's really all the time that we have on this episode of Ask BQ. I would like to thank both our guests, Gaurang and Brijesh, for helping our viewers with all the queries that you did answer today.
Remember, we're just a tweet, post, or a call away, so please keep your queries coming, and we promise to address most of them through our shows. For all our previous episodes, visit our YouTube channel or our website, bloombergquint.com. Up next is Powerland. Stay tuned to Bloomberg Quint.